Ladies and gentlemen, good day and welcome to the KP Energy Limited Q4 FY'25 earnings conference call, hosted by Share India Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Patel from Share India Securities. Thank you, and over to you, sir.
Thank you, and good evening, everyone. Congratulations on a very good set of numbers. On behalf of Share India Securities, I welcome you all to Q4 FY'25 earnings conference call of KP Energy. We are pleased to have with us the management team represented by Mr. Afan Farooq Patel, Whole-time Director, Dr. Alok Das, Group CEO, Ms. Shabana Bazari, Chief Financial Officer of KP Energy, Mr. Salim Yahoo, Group CFO of the company. We will have the opening remarks from the management, followed by the question and answer session. Thank you, and over to you, sir.
Hi, everyone. This is Ritvik, AGM Investor Relations for KP Group. Thank you all very much for joining us today to go over another set of great numbers from KP Energy Limited. We've had a great quarter and great year. To our already installed capacity of 1 gigawatt, we are adding another 3.2 gigawatt of renewable energy portfolio to the group. In every single metric, such as income, EBITDA, and PAT, we've essentially doubled our money this year. So without further ado, I'd like to hand it over to our director, Mr. Afan Patel.
Good evening, everyone. Thank you for joining our investor call and letting us to present ourselves in front of you. So as our Ritvik already said that we had a great result as we have committed last year, and we will go through again. We are committing for next financial year. So I want to say only one thing. I want to only present one number that total India from the NITI Aayog. Indian renewable energy potential is 1,164 gigawatts. India installed wind capacity till 30 April 2025 is 51 gigawatts. So only 22.82% of India's potential onshore wind energy is tapped. So there is a very good opportunity for your company to go for growth and for doing more business, for giving you more good numbers. So this is the potential of onshore. So second thing which is coming, second innovative thing which is upcoming is offshore. Offshore wind potential is 70 gigawatt identified, and it is very positive that the two states which are identified, one is Gujarat and one is Tamil Nadu. One is Tamil Nadu, so where your company is established and where its potential is there, that Gujarat also have a very good offshore wind potential. So over to Ritvik.
Thank you, Afan sir. I would now like to introduce our Group CEO, Dr. Alok Das.
Hi, good evening, everybody, and welcome to our meeting today. Basically, I can tell one thing with the starting that future is really green. You know, when KP Energy is striving long back, and we are doing predominantly in the wind energy projects. And today, there are a lot of things are going, not only wind, there's a renewable energy as a part. Reason being very simple. You know, as of today, there are, 220 gigawatt watts of renewable energy fed into the grid. And out of that, solar is means about 105 gigawatt and wind is about 50 gigawatt. And there's a huge potential to cater through, like what Mr. Afan was telling. Wind has a lot of potentials, and the offshores are also coming up. And not only that, that every renewable energy driven by a policy. So from central to state level, there are so many states are coming out with a very good conducive policy. And today everything is coming under renewables like, solar, wind, offshore. There is a green hydrogen is coming. So everywhere, if you can see that wind is a predominant factor because of high capacity factor. So I think that while going forward today, in India, there's a demand, peak demand is 273 gigawatt. It's a huge demand, So where your companies fit in the very right platform, and you know that we have already done some of the projects planning for the out of our present state of Gujarat. So in a whole coming forward years, we'll be doing a lot of things related to your company for the initiatives of the green hydrogen, particularly the wind addition. So now I would like to introduce our CFO, Ms. Savarna. So you can take over from here and present it. Thank you.
Thank you, Dr. Das. Good evening, everyone, and welcome to the earnings call of KP Energy Limited towards the Q4 and the annual results for the financial year 2025. I'm Shabana Bajari, CFO, and I'm joined today by our whole-time director, Mr. Afan Farooq Patel, our group CEO, Dr. Alok Das, and my colleague from finance team, Mr. Salim Yahoo, being the members of our leadership team. Thank you for joining us today, and we look forward to sharing the insights on our financial performance, key milestones, and future outlook for the upcoming quarters. KP Energy is a prominent wind energy EPC company in India, focused on delivering comprehensive balance of plant solutions and turnkey execution of utility-scale wind power projects. With expertise spanning wind site development, infrastructure, and grid connectivity, the company plays a critical role in accelerating India's renewable energy expansion. As of April 25, like Afan sir already pointed out, India's wind power capacity has surpassed 50 gigawatt milestone. This achievement highlights the nation's commitment to expanding its renewable energy portfolio, with wind energy playing a crucial role. Gujarat has emerged as a leading state in installed wind power capacity, surpassing Tamil Nadu as on December 24. We are now pleased to report a robust financial performance of Q4 and full financial year ended 31st March. This year has witnessed numerous peak performances across the key metrics. The company has reported total revenue on a consolidated basis for the fourth quarter of FY'25 at rupees 408.6 crore as against that of rupees 217.4 crores during the fourth quarter of the previous year, thereby reporting an increase of 88%. Whereas the total revenue for the year ended March 25 on a consolidated basis stands at rupees 958.5 crores as against that during the year ended 31st March 24 at 485.5 crores, representing an increase of 97%. The company has achieved its highest ever quarterly as well as annual total revenue on the consolidated basis. Coming to profitability, the consolidated EBITDA for the fourth quarter of financial year 25 was rupees 77.9 crores, representing a 91% year-over-year increase in comparison to the fourth quarter at 40.7 crores. The EBITDA for the year financial year 25 stands at 196.1 crores, reflecting about 100% increase in comparison to that for the financial year 24 at 98.5 crores. The highest ever number demonstrates our continued efforts towards operational efficiencies. The profit before tax for the fourth quarter at FY'25 stood at rupees 64.7 crores compared to that at 34.1 crore in the fourth quarter of the previous year, reflecting an increase of 90%. That during the year FY'25 stood at 154.7 crores compared to 77.4 crore in the previous year, reflecting an increase of about 101%. Again, these being the highest ever numbers until now. The PAT for the fourth quarter of FY'25 has been reported at 45.8 crores compared to 24.9 crore of the previous year, reflecting a growth narrative of 84%. Whereas that for the year stood at 115.3 crores compared to 58.3 crores during the previous financial year, reflecting a growth of 98%. Furthering the creation of enhanced value for the shareholders, the basic EPS during the financial year 25 stood at 17.3 rupee per share as compared to rupee 8.8 in the previous year. With about 1+ gigawatt already installed, our order book stands at about 2.26 gigawatt, inching us closer to the ambitious target of 10 gigawatt on a group level. This has helped us strengthen our position in the renewable energy sector. Our current consolidated IPP portfolio now stands at 48.5 megawatt, including a combination of both wind and solar IPP projects. The O&M segment is an important part of our business, which helps us reliability in terms of the renewable energy assets that we build and give us a long-term performance. We cover 546 plus megawatts, and this includes provide comprehensive support together with scheduled maintenance and predictive diagnosis. With this, I would open the forum for the question answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Rampuria, who is an individual investor. Please go ahead.
Yeah, thank you for giving the opportunity and congrats for a great result. A couple of questions from my side. The first question, I think today there was a disclosure to the exchanges, both for KP Energy and KPI Green for some approval on a central transmission line, right? Is it for an existing project or is it capacity creation for future projects?
This is for the future projects. So that is a central grid connectivity CTU. So it is for the future projects only.
These are future projects. Okay. My second question is on the offshore. I also saw, and I was trying to ask it yesterday, but I couldn't join the question line yesterday. But I also saw it in the KPI Green. I'm only asking it because KP Energy sort of was the focus for offshore. But I also saw KPI Green presentation talking about offshore wind, right? So from a group perspective, will offshore wind be executed through KPI Green or will be executed through KP Energy?
You see, this is a question probably, first thing you have to understand for offshore, this will be happening in India after 3 to 5 years later. It is only very, very primitive stages of that study is going on. And government is only in the allotment, the resources are going on. So, thing is like this in offshore, there are 2 states are coming up, like in the beginning of this meeting, Mr. Afan told. So there is the Gujarat and Tamil Nadu. So Gujarat is coming out of 2 gigawatt and Tamil Nadu is also coming under 2 gigawatt. So now it is from the bidding process is under, just the process is coming up. Now, thing is like our position there, because now if you see that KP as a group, so there are 2 to 3 things are there. The KP Energy obviously doing for the inter-development for related to that offshore wind projects and port facilities and other things. So at particular time, we will be coming and disclosure based on the incompatible when the project will be coming and happening to that person. We are doing some project in planning and all. It is all planning stage as far as the offshore is concerned. Not only that, we are also planning for the KP Energy, some floating, some solar is also coming. So obviously we are also giving some sort of initiatives that side also. So obviously the futuristic that offshore projects would be coming, and in India now this policy is declared. Now how the statutory clearance, everything under process from the state level, state distribution and transmission level, central is creating the power evacuation. So they are given the planning. I think it will take little time to come into the reality.
No, that I understood. Thank you for the response. I was trying to understand which vehicle will we use. Will we use KP Energy for it or are we going to use KPI Green for it?
Yeah, Ashish, I got your point. We just wanted to understand two things. Offshore is a very highly capital-intensive business. And, for bidding for the tender of offshore, you require strong financial. So from that point of view, wherever it is required, we will bid as a group.
Got it.
That is KP and KP Energy together. But expertise of installing will be more with the KP Energy. So together we will go wherever it is required. So that's why it is there in both.
Got it. Okay. Thank you. I'll join the question.
Thank you. The next question is from the line of Sagar Jetwani from Phillip Capital PMS. Please go ahead.
Yeah, hello and congrats on a good set of numbers. I have a few questions. First can you comment on the procurement advantage of wind turbine generators from Senvion in India? That is my first question.
Yeah. You see, from Senvion India, because of, first thing, this is in a design-wise, that is a 4X series. So obviously, when there is scarcity of, land today, so we wanted to have the multi-megawatt turbine for the proper utilization of the land in a lesser area, because if I go for this other turbine, with, this which is available in India, mainly 2.7 or 3 megawatt turbine, so we can optimize our land utilization, be the technological, whatever their design. So they are giving for the better technology, like in the length of height and blade, it is much more. So we are getting better PLF. And third thing is about the maintenance point of view. It is all tubular tower. So that tubular tower, because we are EPC contracting, we have seen the long-term basis, the tubular tower is giving the better yield than other thing in terms of maintenance point of view. These are the few things predominantly we consider for Senvion multi-megawatt 4X series turbine.
Okay. And secondly, on this, what is the capex plan for FY'26, and what should be the total debt on the books by the end of FY'26?
So, considering that we are planning to outgrow our IPP segment also, at currently we are at 45.8 megawatt, a combination of both wind and solar. And yes, setting up an IPP definitely does give an extra edge. We, as already specified earlier, we look forward to have 100 megawatt of total IPP in KP Energy over, up to by the end of FY'26-27. And that is where we are working on. So, since it's a capital-intensive, project where the initial investments would really be there, so we would like to balance our debt equity and go further.
So we would be taking more debt on the books for this upcoming IPP expansion?
Surely, I mean, if you look at our debt equity, it is very comfortable at present. So if there is a very good opportunity, we'll surely add that, and we'll add up the portfolio of IPP because it is an annuity income and it gives more strength and stability to the company's growth.
Certainly. And you had mentioned in the last analyst meet that certain new orders are there in the pipeline. So what is the status update on the same?
These are all orders in under discussion, because mainly for, you have seen that today also we are having some grid connectivity approval and other thing. So because any kind of project that required the long-term planning, mainly it is a CTU project. So all projects is under discussion. So probably by this year we'll be salvage this kind of order into the reality.
Any timeline for these orders we are expected to receive, maybe in Q1 or early Q2?
But hopefully by plus this will take at least for 5 to 6 months to get measured with the order. So obviously we are expecting before September.
Before September. And what's the total order intake expectedly?
You see, basically that we are planning for before September, whatever our resource available, we are planning to get about let's say close to 500 megawatt or so.
Okay. Last question from my side. How much is the order book outstanding in monetary terms?
So, see, as I would like to highlight here that there are certain orders in which the capacities have been enhanced, and we have got certain additions to the same. So last quarter when we begin, we had about 3,150 crores of orders in hand at last point of time. Currently, it is about 2,800 plus minus.
Okay. Thanks. That's helpful. All the best.
Yeah. Thank you.
Thank you. The next question is from the line of Deepak Jindal, who is an individual investor. Please go ahead.
Yeah, hello. Thanks for the opportunity, ma'am. Ma'am, actually, I wanted to understand, right now the order backlog is 2.26 gigawatt, and by the end of Q3, the order backlog was smaller. In spite of execution in Q4, our order backlog has increased in terms of gigawatt or megawatt. So have we got some new orders in Q4?
Yeah. So what has happened is that while there are a certain capacity additions in terms of the change in the AC/DC ratio and also in terms of certain enhancements on the existing order, further there is a LOA received towards approximately 150 megawatt. The contract and the technical negotiations are under discussions as yet. And with that, we have already got a commitment towards 150 megawatts. So that is the reason why you are seeing at 2.26 gigawatt.
Okay, so this 150 megawatt for which the LOA is received, that is included in this 2.26.
Yeah.
Okay. Another question, ma'am, just follow up on the previous question, the new pipeline and the inflow of orders. Last time you mentioned we are working on a 3 gigawatt plus kind of a pipeline, and the order inflow will take some 5 to 6 months. Have we made some, progress on those, and any color on those? I mean, by when can we expect? By September, can we expect some good inflow of orders, and how big would those orders be?
Yes.
Yeah, I think if you look at the pipeline that we have all together, okay, now you need to understand our revenue recognition. We recognize revenue on a milestone basis, and from that point of view, the capacity is when it is energized into full place, then only we count it as a. So the order that you see at present also, there are orders up to 3 gigawatt in pipeline today also, where portion of work is done. So as we go forward and we start booking the entire capacity, that order gets complete, then only that gets into energized. So you might see that the total capacity, that the revenue that we have booked into is compared to the capacity energized. There will be a difference between that because we book on milestone basis.
Yeah, I get that. Actually, the question was a bit different. I wanted to understand the new inflow of orders. Can we expect maybe by end of, let's say, this quarter or maybe by September end, some new order inflow to be added to the order backlog?
Yeah, you see, the thing is like this last, whatever your this pipeline, that was a discussion, mainly this is in CTU kind of projects. So this will take for the contract and this thing, all this thing required little time. They need a certain clarity of power evacuations, which, this has been delayed for a long time, and today only we got the resources. So based on this planning, whatever we have got about the 642, 100 megawatt projects, so obviously we are now planning in a full space. So that is why I have been telling that we can book the order before September. And like that whatever the project pipelines, whatever is there in the discussion is going on. Time to time we'll disclose, but today we cannot disclose of the name and all. But yes, there are few, just this project is under discussion and very actively. So that is what I told. So that is the September onward, you will get the good news about that.
Okay. Last question from my side, sir. This internal order from KPI Green to KP Energy about that 1.2 gigawatt IPP from GUVNL. What is the timeline by when we are planning to complete the order? Is it by March 26 the order will get complete fully?
So, as I told in the earlier call as well, that the entire execution will be done in a phased manner, and so that the benefit of the generation can be had by KPI also, and execution also becomes an ease for us. So, over a period of time, by October 26 is the final timeline by which we shall be able to complete the entire order.
Okay, by October 26. Okay. Actually, my reason to ask this is because Dr. Faruk Patel in the interview, just 2 days back, mentioned that, the entire 1.2 gigawatt will get completed by March 26. So that was the reason why I was asking for it. But
I would like to I'd like to emphasize here that the timeline given to us permitted as per the contract with the GUVNL permits us to execute for 26, although our efforts will definitely be to complete it faster and sooner.
Got it, ma'am. Got it. Thank you. Thank you so much, ma'am. Yeah.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Hello. Thank you very much for the opportunity. Actually, I was about to ask the same question, and it just got replied, and all the other questions were also replied to my satisfaction. Thank you very much. Congratulations on great set of results and excellent execution. Thank you very much. All the best.
Thank you.
Thank you. The next question is from the line of Akhilesh Kumar, who is an individual investor. Please go ahead.
Yeah. Last time we discussed about that two parts, NTPC renewal and Angel order, which was 464 megawatts, and which has got delayed because of client side some issues. And it was informed that it will take another 6 months to complete. Can you detail where we stand now?
Okay. First of all, the order was not delayed. I would say rather that NTPC and Angel took their own time to come back with the revert that they were to come back on and give us the clarity on the work that was to be executed. And this was the requirement at their end. So yes, definitely continued. Foreseeing the delay that has happened at their end. I mean, they did not provide us with adequate information. That is the reason why the final date of execution has also gotten extended, and currently the order is under execution, and we will complete it within the extended timeline.
So that earlier 6 months, the target is not reachable, right?
It has been enhanced by 6 months. That's what I'm saying.
Oh, okay. So we are able to get some revenues out of that milestone basis, or we are not able to?
Yes. So we have already started invoicing over it, and quite a lot of invoicing have been done. Here the execution, depending upon the scope and the milestone, we have already billed them. We have also started receiving money from them, and the order is completely in a streamlined position.
Okay, thank you. And how many subsidiaries we have in consolidated results apart from our main groups?
There's one wholly owned subsidiary, which is KP Energy OMS Limited, which handles the O&M portfolio.
Okay. May I know what was the revenue for them in this year?
I'm sorry, could you be a bit louder? About 4.5 crores.
Okay.
Revenue, right?
Yes. Okay, thank you.
4.5.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, can you hear me?
Yes, sir.
Yes.
Yes. Yeah. So I just wanted to confirm, since of the previous participant, what would be the capex that we're looking for? You didn't mention about the figure what we are looking for this financial year.
Capex?
Yeah.
CapEx, you are saying that the CapEx, right? So we have, discussion. We have to go with multiple factors. We have to look at the opportunity that is coming in our plate. Along with that, we have to look at the debt equity. We have to look at the, the feasibility of that particular site and everything. After that, we decide on whether it should be taken or not. So it depends upon different. But as we said earlier, that there is a lot of, gap in our debt equity, so that we can take additional debt and we can do capex for this. So that is there in the pipeline. But at present, there is no constructive that we can give on the call. But because it's a recorded call, we cannot give any constructive figures right now. But yes, it is there in the pipeline. You will see capex being in this coming year.
Okay, fine. And the other question would be on, as you mentioned that this 2.26 gigawatt order book will be completed by October 26. What kind of recognition will we see in this year?
I would like to correct you here, Darshan. 2.26 is the total order book on hand. Out of that, about 1.2 gigawatt pertains to the orders received from our group company, which we are expecting to complete by October 26, which is the maximum timeline. We will try to finish it as fast as possible and complete it earlier. Coming to the overall project timeline, kindly understand that the total, whenever a project of this, stature is being taken up, the timelines are typically from 18 to 24 months. depending upon the size of the project. So gradually they are under the process of execution. Few projects will be executed by the end of December, a few by March, and few by June subsequently. So each project has a different timeline.
Okay. Got it. All right. I'll fall back in the queue. Thank you.
Thank you.
Thank you.
The next question is from the line of Pranjal Soni from RRR Investments. Please go ahead.
Hello. Congratulations on great set of numbers. So my question is, in the fourth quarter, the company's IPP segment experienced a decline in margins compared to its third quarter. So could you provide us insight into the factors contributing to this decline?
Thank you, Pranjal. Yes, as you are already aware, we had already mentioned in our last call that we will be going up with another project for IPP, where we were to commission 28.6 megawatt, and the average rate of that particular project consistently for 25 years is slightly lower than what we have in other projects. That is the reason why there is a small dip in the margin. However, I would appreciate the fact that I would like to add on to it that this entire rate will remain firm over a period of 25 years. And I feel that in the coming years, where the average cost of power is going to reduce drastically, this seems to be a win-win situation to have garnered this rate at this juncture.
Okay, and what is the rate?
That is ₹2.43 per unit for that particular project.
Okay, thank you.
And the other projects, we get it at about 6 to 6.5 rupee per unit.
Okay. Got it.
Ma'am, does that answer your question?
Yeah.
Thank you. The next question is from the line of Shikha Mehta from Time and Trade Advisors. Please go ahead.
Hello. Good evening. Congratulations on a great set of numbers. I have a few questions. One, following up on the IPP question that was asked by the last participant. As you mentioned, our current rate is 2.43 rupees compared to 6.5 that we get otherwise. And the reduction in margin is actually not as substantial as one could have expected with this kind of a rate change. So could you tell us how we are maintaining our margins on the IPP and how we are maintaining our IRR?
Okay. Shikha, thank you very much for the question. I would like to specify here that the last project, which has a 2.43 ka unit rate, has been commissioned in the fourth quarter, mid of the fourth quarter, between January end and February. And that is the reason why the revenue that has flowed from that particular project is not that substantial enough. And that is the reason why the average is not yet, it is still at a higher rate compared to what we had. Coming to IRR, as I already pointed out, that there are a couple of things which we intend to specify here. The project is at a location where KP Group has already been mobilized over there. So the overall fixed cost and the maintenance costs are considerably lower as compared to a standalone project executed elsewhere. This helps us in maintaining our margins.
Okay, so we're not expecting any major dip in our IRRs on IPP in spite of the lower rate, correct? That's the right way to consider it.
Correct.
Okay, great. And also, can you help me with our order bid pipeline?
Okay, so as I told in the last call as well, my current order bid pipeline is about 3.5 gigawatt. Last time we had about 3 gigawatt, and as Dr. Das already explained that there are many more seekers, and we are actively under discussions with the clients because this is a CTU, they are CTU based projects, so we are under active discussions with them.
Got it. And I think on the last call we had mentioned that while we weren't facing as much of an issue, grid availability was an issue nationwide. Has that eased out, or is it still an issue?
Here, I would like to give a small insight that while connectivity typically is in the scope of the client, the end client, because connectivity is something which is not transferable. So, Per se, we do not see anything affecting us directly. As you can see from our order book, we already have our hands full for almost a year now, more than a year now, and we do not see any challenge. And with the government playing an active role in developing the grid, also going for one grid, one nation concept, I think in the period to come, this would all automatically ease away.
Understood. And lastly, on the O&M side, I think for the first few years, we don't charge for the O&M, which I assume now, from FY'26 onwards, we'll have a higher charge rate on the O&M side. So could you give any indication on that or help me understand that better, how we can see it grow?
You're right that in the initial years, we give certain period as a free O&M, typically as a warranty condition to the plant construction. And this year, we had about 4.5 crores of O&M revenue, and we're looking forward to almost 6 to 6.5 crores in this financial year, the current financial year.
Got it. Okay, great. Thank you for answering my questions. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Umang, who is an individual investor. Please go ahead.
Hello, ma'am. Congrats on a good set of numbers. I will just follow up questions on the order book side. Ma'am, you just mentioned in the last phone call that our order book stands at 3150 crores, and it is about to complete in 2026 or after 6 months of 2026. So I'm asking, is the company firm on that number?
Yes. I would like to elaborate here a bit. Last quarter, when we had the earnings call, the total order book was 3,150, and currently we are at about 2,700 odd crores of order book. And meanwhile, we have executed the order in the quarter, which you can see is being reflected in our top line as well.
Okay. So, ma'am, I just want to ask on the revenue side, that means you are I just want to ask if the company will deliver once again 95% plus revenue this year.
I would appreciate if you look into the statements of our Honorable CMD, sir, where he has been already telling that the company is looking for 60 to 70% growth on a year-on-year basis, and with all your good wishes and support and the hard work that the team has been doing, we are able to excel. I look forward to the similar results in coming future.
Okay, ma'am, just one question on the margin side. Ma'am, as you just mentioned about IPP, order book of 48.5 megawatts. And if I'm able to recollect, after the results, Farooq sir just mentioned on a TV news channel that Aditya Birla Group and so many big companies are coming regarding order books. So if there is a scope of any margin expansion, as you know that in IPP, last phone call you just said 75 to 80% of EBITDA comes from IPP segment. So is it possible in this year to we can see a revenue jump in IPP segment?
Umang, first of all, there are two things. I think they are different here. Aditya Birla is our EPC client. It is not our IPP. We do not have anything to do with IPP there. Okay. IPP is a project of our own. We have the plant set up, capex set up, and it is on our books, and there is a generation of power where the power is eventually sold to either the state-owned entities or to the private entities, and the revenue generated therefrom is that from the sale of power. Coming to the income from the sale from EPC related segment, in that case, we take up contracts from clients like Aditya Birla and NTPC and so on. And based on the contracts entered into with them, we execute that and we generate revenue from that execution. And if you see over the period of time, yes, there are both the advantages of large scale and there are also I would say, not disadvantages, but rather I would say economies on the part of the client as well. So we have more or less tried to ensure that the margins remain constant.
Okay. Thank you, ma'am. All the best for the future, and thanks for taking my questions.
Thank you.
Thank you. The next question is from the line of Shaurya Yadav from Pinpoint X Capital. Please go ahead.
Hello, am I audible?
Yes, sir. I would request you to speak a little louder. Thank you.
Yeah. My question is, can you just explain to me your process for site identification until it became operational for customers? Like, what are the things that we generally look for in this whole process?
Shaurya, could you please be a bit louder and repeat your question? I heard site identification.
Yeah, ma'am. Now am I audible?
Yeah. Tell me.
Yeah. So my question is, can you just explain me your whole process from the site identification till it became operational for customers? Like, what are the things that we generally look for in this whole process?
Site identification, are you talking, right?
Yeah.
It is site identification for particularly wind projects. If this is the question, previously there is a call that mapping of the sites for which we have to install a wind mast. That wind mast to record the data at least for 1 or 2 years, and to see that potentially that sites are okay to generate the power or not. Based on this data, we will be first getting the confidence that this site would be compatible for the wind generation. It takes about 1 to 2 years. And after that, there's other resources to be created like power evacuation, other things, and land acquisition. So, if you see the time duration, 2 to 3 years is required to declare a site is a potential site for this project, kind of wind project.
2 to 3 years.
Yeah.
And my next question is for the project under negotiation. What is our conversion ratio?
I would like to take this question. So, first of all, we need to identify the two different methodologies through which we garner the contract for the project. The first is the tendering-based methodology, and the other is face-to-face discussion with the client one-on-one. As far as one-on-one are concerned, on the contrary, in the total case, if you see that the supply is much lesser than the demand, the requirement of wind segment and the people who are in the business of setting it up is, the people are much lesser and the requirements are much higher. This actually allows a lot of market to be available before we can pick and choose. So I personally feel that there does not happen to be any kind of a bid success kind of a cycle in this. When it comes to one-on-one discussion, it is always more about what best technology and how fast we can execute the project and how quickly can we deliver our commitments. That is what matters, how efficiently we can do it. And there is where the negotiation happens. When it comes to the tendered project, like we have for the PSUs, in such a scenario, as I said, that the requirement is so high that there is sufficient for everyone to bite and eat.
Okay, ma'am, understood. And ma'am, going ahead, like, what would be our execution run rate?
Execution run rate, what is that?
Shaurya, we are into a business which is a project-driven business. There's a long gestation period or construction period for any project. If it is driven somewhere between 12 to 18 months. So so it's not like a manufacturing unit where you can call it out as an execution run rate. But as you can see that, we have been able to execute. If you look at whatever the order books are there, which we have given till FY'26, what we have given October or something. So you can figure out that we have been in our execution capabilities, and we have done in the past more than a decade experience into the execution. So we are able to execute our project before time in most of the cases.
We also have about 1+ gigawatt of installed capacity. I think that speaks volume about what we have delivered until now.
Yeah. Okay, ma'am. Understood. Thank you.
Thank you.
Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants that you may press star and one to ask a question. The next follow-up question is from the line of Deepak Jindal, who is an individual investor. Please go ahead.
Yeah, hello, ma'am. Thanks again. Ma'am, I wanted to understand after getting live with this IPP of 48 megawatts, what would be the blended margins look like? I mean, the EBITDA blended margins for the PAT margins for FY'26?
Could you repeat your question?
Yeah, ma'am, I wanted to understand the blended margins after considering IPP as well.
Okay. So, first of all, I would like to give you an insight that IPP constitutes only 3% of my total turnover. So from that angle, as of now, it is only 3%. 97% is the EPC business and about 1% is the O&M business. So I do not see any change in terms of the margin with reference to any change in the IPP.
So the margins are driven by the EPC business only.
Got it. And secondly, I mean, out of this tariff war, I mean, there was a news that China is restricting the control of rare earth metals, and some of the metals are being used for windmill as well, some magnets and all. Are you guys also hearing any of this where the OEMs are facing some issues in procuring those metals and the wind turbine production is getting impacted because of it? Any color on that?
See, thing is like this, there are two parts. Let's say for the wind industry, the ministry is very stringent. So they are going under Make in India initiative. They have mandated for those people to be allowed for the business, those who are having more than 80% that material should be made in India. And out of that, there are a couple of suppliers there in India who are supplying and they are not really affected by the tariff what you are talking about. So we are free to do our business in India.
Got it. And so last question, just I mean a bit kind of an Uber idea that I was just working on is our order book for the last, let's say, 1.5 years has been stagnant a bit, including the order from KPI Green. So what is it taking so much time? You said that the demand is super high, it's more of a high demand and a less supply. So are we kind of consciously waiting for big size orders, good margins, that's going to take some more time? This is what you are just saying that it will get materialized in September, October. Or I mean, something else is happening because the order backlog has not been moving pretty fast, pretty aggressive from last 6 to 8 months.
Deepak, I would like to first explain the concept of the execution in terms of megawatt and the revenue recognition. So this has been a constant question in every call. And here when we talk about in terms of megawatt, what has happened is that the megawatt changes and gets converted into the order delivered only when the installed capacity has been delivered. Whereas in terms of the revenue booking, the entire order is split into different milestones, multiple milestones, and each milestone is being recognized in the books as sales upon completion and certification by the client. So here, while you may not be seeing in terms of megawatts and gigawatts, you may not see the movement, but the revenue recognition happens in parts. And when the contract is completed, the capacity is installed, that is when we show it in terms of the capacity installed vis-a-vis capacity available to be executed.
Okay, got it. Ma'am, if I just put it indirectly in a very layman term, let's say, I mean, our order backlog in monetary term right now is, let's say, 2,800, 2,700 CR. And we are just saying that, by September, we are expecting some good orders, good CT orders to be announced. Let's say FY'26 exit after executing whatever is being pending for the year. Would you feel that, just a directional sense that our order backlog, maybe in monetary terms or maybe in gigawatt, would be higher than the current one, even after execution of FY'26? Let's say by end of FY'26 coming FY'27, our order book will be significantly higher than the current one?
Yes. Before that, you need to understand that almost each order has an execution period of about 12, 18 or 24 months, depending upon the size and the scope of the order. So definitely there will be a spillover over the financial year.
Yeah, there will be spillover, ma'am, but more interested to understand the inflow of orders, right? I mean, what's done is done in the current order book. I'm more interested to understand the inflow of orders for FY'26. Let's say, I mean, by September or October, whenever we're gonna announce some new orders, which will add to the order backlog, that will be substantial chunk of the current order book, because we are seeing the pipeline is strong. So any color on the inflow, maybe you can just guide us something on the megawatts of the orders that could get converted out of the pipeline, or the monetary order inflow that could get converted from the pipeline. Any color on this, ma'am, because this order inflow has not been kind of, been shared for the last 6 to 8 months. The
thing is like this. I mean, as I reiterated, there are pipeline under discussion is going on. It is kind of CTU projects, and based on the various facilities, we told that our trajectory, there should be some volume will come. So at appropriate time, we'll be declaring that positive points is there. There are demand sides are very high, and we have got a lot of resources to meet that demand. So obviously, the path is very, very rosy, and we will be declaring appropriate numbers and time at appropriate time. Yes, it is a positive sign for us.
It's a positive sign, right? That's the only direction I'm just kind of hopping out for. So you're saying we are on a positive trajectory for the inflow of the orders as well. So whatever time it may take, but definitely there's a demand for the orders to be converted, incremental one.
Yeah.
Got it. Thank you. Thank you so much, sir.
Thank you very much. The next follow-up question is from the line of Ashish Rampuria, who is an individual investor. Please go ahead.
Thank you. On the other states, while I think Dr. Alok spoke about offshore in Gujarat and Tamil Nadu, but can you also throw some light about plans for other states? I saw in the presentation report about MP, Maharashtra, 2-3 states being mentioned. Can you throw some light around those?
Yeah, I will tell you, because as I said, that there are a lot of demands are coming, both CTU projects at the various states, and we as a company group level, we have already executed 3 states MOU, like in Rajasthan, MP, and Odisha. And as usual, like the create of the resources like land and P, so that is under execution mode. We are in the path. We are creating a sizable land and P in the gigawatt terms. So obviously this state, obviously whatever our group target, about 10 gigawatt, that kind of resource, we are in the spree of the creations of to that, all these 3 states, if you do it accommodatively. So more than 10 gigawatt worth of, creation of, land and sea, that is being attempted to create, and we are very positive. Probably, just beginning that this kind of resource creation takes about 24 months minimum for the wind potential mapping and grid creativity. So obviously, other states, while going forward, will be creating that kind of business opportunity for your company.
Got it. So in these states also we are talking of wind potential there, right?
Yeah. So you see, basically there are Rajasthan, there are both the potentials are good. For MP, there's also good potentials are there. So we are already going for the resource management, etc., like the wind mast installation and other things.
Got it. Thank you and all the best.
Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, the next question is from the line of Gaurav from Sanjay Capital. Please go ahead.
Hello, ma'am. Ma'am, since you told that the IPP segment is just 3%, so my question is, will we be able to maintain this 19% consolidated EBITDA this year also?
Yes.
Okay. And now, ma'am, since we are talking about 60 to 70% of CAGR this year, since now the base will be big, we are talking about 1,700 crore of business this year. Now, how long we can maintain this type of CAGR for the further years, if I talk about FY'27, 28, right?
Here I would like to, refer to the discussions that Dr. Das had before, and even Mr. Afan Patel had mentioned the scope available in terms of the wind renewable sector and also the upcoming offshore. And here, I do not see any downfall in the upcoming demand. I would like to here mention that while the total target of India by 2030 is 500 gigawatt of non-fossil fuel-based energy, wind typically has 100 gigawatt, and of that 50 has been achieved. That leaves 50 which has been planned by 2030, which means even if you do it a simple average, it comes to 10 gigawatt a year, which is a substantial, target in terms of the country as such, and with not many players, I don't see any downfall in the upcoming orders on hand. I mean, upcoming orders. And here, I do see that we will be able to sustain this growth pattern for a considerable longer period of time.
Okay. Thank you. Thank you for a detailed answer, ma'am. That's from my side.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you, Tejal. I'd like to once again thank all participants and investors for joining us today. And thanks again to our management, Director Afan Patel, Group CEO, Dr. Alok Das, KPE CFO, Shabana Bajari, and Group CFO, Salim Yahoo. Thanks all.
Thank you. On behalf of Share India Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.